Hey guys, welcome back to another edition of FAQ on trading, the frequently asked questions about trading. It's been a while since we did one of these, and you're probably wondering, why am I in a car all the time doing this segment series? The reason why is because I don't know when these ideas come to me. I've had a lot of great ideas while I'm in the office trading or at home in my bed, whenever it strikes. In California, the traffic's pretty bad. And so we have a lot of time while driving, right, to think of stuff. So I thought of something that a lot of people have been asking me, which is fear of trading. A lot of people ask me, Bao, I have all these great strategies and setups, and man, if only I could pull the trigger, I would be making money. But the problem is, whenever the time comes for me to pull the trigger, I'm scared. How do I alleviate my fear of trading? Well, the answer is this. I'm afraid of trading. I've been trading for almost 2 decades, and I'm still afraid. The reason why I would be afraid is because I think about being afraid. If you're always thinking about how scary something is and fear of it, of course you're going to be afraid. Then you'll start thinking about every bad situation that could possibly come up, right? And so what I do is this. I don't even think about fear. It's because I've been doing this for a long time. It's repetition, over and over and over. It's systematic, it's robotic in what I do. And so when I do it, I don't even think about anything. It becomes a reflex. I call it trading as a reflex. And a reflex could be, you throw the ball in my face, I move out. I don't even think about moving my head when you throw the ball in my face, right? Because I've been so used to doing that, and it becomes a reflex. So I'm not afraid that you're gonna throw the ball at me anymore, because I know I can move my head, right? And so same thing with the concept of trading. So this is how you can do it, okay? First of all, practice, super small size. The more times you do something, the less scary it becomes, because you're more confident in that process, right? Hey, why are you afraid? So there's a couple of tricks I like to show you, okay? The first trick is using what I call fantasy orders. What a fantasy order is placing an order before the actual trade gets there. Basically, I am putting out my order. It could be a starter position if you want. You don't have to put 10,000 shares right there. You can put 1,000 shares there. You can put 500 shares there, whatever you like. You put it there, and basically you wait for it. The reason why that works very well is because of this. Before you enter the trade, you should have already predefined everything. You predefine where you're going to enter, where you're going to exit, where you're going to take the loss, things like that. That's because before you enter a trade is when you are most clear-headed. You are not emotional, because when it gets there and you don't have a plan and you're making things on the fly, you're going to be scared to pull the trigger because you're second guessing yourself. What if? And so what you do is you place the order before it even gets there. So I have my list of fantasy orders. I place them out there. It could be way out of the market. Who cares? It's a fantasy order. If it doesn't execute, it doesn't execute. But when it does get there and it executes, you know you're okay, because you pre-planned it ahead of time. It's before you became emotional. So the problem with trading and fear and all this stuff is you're making stuff up on the fly when you're emotional. But if you pre-plan everything, we call this the process, right? So we teach this at MIC. So it's a process. So that's number one trick, using fantasy orders. Number two, predefine your risk. Use math to figure out where you want to stop out and how much you want to lose for that trade. What can you afford to lose, right? If you predefine your risk, why are you scared? You know exactly how much you are going to lose if you lose. That's not scary. The fear is the unknown. But if you pre-plan everything, okay, what is the unknown? If you cannot figure out where you're going to stop out for a loss or where you're going to enter or exit, you shouldn't be in the trade. And if you are putting your stops out too close, it means your size is too big. If you're afraid, maybe your size is too big, right? Reduce your size and increase your range. Increase your wide stop, okay? Make your stops wider. Basically what it does is, okay, let's say I want to lose only a maximum of $200 this trade. So you do the math. How many shares you have, how many shares you want to stop out, and that is your risk. You predefine your risk. okay? Your risk profile is very important because that's what's going to happen is it's going to determine your size, where you're going to enter, where you're going to exit, and basically now you already know ahead of time what your max loss is going to be. So why should you be scared? If you're still scared, set your max loss smaller size, wider range, and the end result is you losing only what you predefined you are going to lose. So within a combination of those things, if you're doing research after you get in the trade, that's wrong. That's why you're afraid. Do all your research. Part of the process should be researching the stocks you want to enter. Don't just enter blindly. Ask yourself why you are entering that stock. What is your edge? What is your advantage? What is your plan? Okay, a plan includes, once again, the entry, the exit, and the exit could be multiple exits. The entry could be multiple entries. I call it scaling in and scaling out. So exits include also this. A lot of people only plan their stops, and what I call a stop is when you lose. A lot of people don't plan where they want to take a profit. You must know where you want to take a profit ahead of time so that you can take some off the table. Otherwise, you're going to hold on to that position, turn a winner into a loser because you're making stuff on the fly. And then what's going to happen is it's also the fear of missing out. And that's why a lot of people lose, okay? They don't plan their profit taking. And so they get greedy when the time to take the profit, they don't take the profit. They go, oh my God, what if it goes more? I'm cushioned out. And so what happens is they turn a winner into a loser. Okay, do not turn a winner into a loser. If you turn a winner into a loser, that means you did not pre-plan your trade. You did not put your hard stops. Use hard stops. Okay, that's another way to alleviate your fear. Use what we call conditional orders or trigger orders or range orders. Those are the different types of terms for that type of order. In MIC, we have videos on how to do these type of orders. So with that in mind, how could you be fearful anymore? Because you've already figured out the unknown. Fear comes with unknown, okay? And lastly, fear is also FOMO, fear of missing out. So this is how fear screws you, okay? Let's say you want to enter short the stock at $5. But you do not place it out. You don't have an open order, right? You don't have a fantasy order. So what happens when a stock hits $5, you're like, oh my God, what if it goes to $5.50? It looks so strong. And so you don't put it in. And so it hits $5 and it drops 25 cents. Boom, just like that. And you're like, man, I should have entered that trade. So that's what's called FOMO. And so what's going to happen is this. You're going to chase it down. You're going to chase that stock down. So that stock, instead of now shorting at $5, you're shorting at $4.75. So what's going to happen? You've just chased and the stock bounces back to $5. You take the loss, and now what happens? You're like, oh my God, dude, I was right. Now I'm wrong. Now you're fearful. Now you doubt yourself. So your next trade is going to be a cascade domino effect of fear. You see how that works, guys? So FOMO is a result of fear because it's called fear of missing out, and that's what causes a lot of trading errors and problems and losses, okay? And it stems from the actual fear itself because you were right at $5. You just did not. You were too chicken because you're fearful. So how do you resolve that? I'm going to repeat it one more time, okay? Fantasy orders, pre-plan your risk, know where your exits and stops are. And there we go. It's as simple as that. Trading is not simple, but you know what, man? If you do it enough times, the process gets easier and easier. Make it a process. First, start out with very small size. Try this with paper trading. That way you can build confidence in a small size and you can always increase your size. Good luck, guys. I will see you guys next time on the FAQ of trading.